Hey, good morning, guys. This is my morning video. Please, before I forget, like the video below on YouTube if you can, and I'm more than happy to like to have as many questions down below the post as you possibly can. And you can follow me on Gumby9662C on Twitter. I appreciate it. If you can retweet my video, I do appreciate that. You know, more retweets, the more I'm going to be inclined to do these videos. So, with that all being said, some takeaways. First of all, yesterday they had to issue a lot of new shares of the RSX ETF tracks Russia. Typically, that is a bearish, or that's a they have enough shares out there for normal demand. Okay, and whenever you have an outside demand situation, typically that might lead to an exhaustion scenario. So the whole Russia news thing might be exhausted since they had to issue all those new shares. Keep that in the back of your mind. This today, Russia is rallying a little bit. You know, they're coming off their yesterday's lows. So I do want to keep that in the back of your mind. That news might be baked into the markets. Then also I've got there's some other things I was going to mention. We had some inflation data come out of Australia. It was horrible. And then we had one of the Asian countries unexpectedly raise interest rates, and it just Asia did not like that. So I can't remember what it was. I caught it. I did, but that did happen. Okay. So as far as technicals go this morning, Europe is up this morning, and U.S. futures have come off of lows of the overnight session. And so some basic things I do want to take away here. You see back here, August 2019, the measured move that we actually did back then. That's one of the extremes we've had in a very long time. We did off of a lower base achieve and actually achieve basically that same measured move as of yesterday. So just keep that in mind. I know some people want to go short the markets right here out of the gate. That's a really extreme move historically, and so and we're having trouble getting above this uh, pivot. Okay, we have a pivot that was back August 2019. That's acting as resistance right now. We're having trouble getting back above that and holding above that. So just keep that in mind. This could be a potential high here for our VX futures going into today's session. So I do want to float that out there. We do have the Fed tomorrow. I tend to believe that we will probably hover up in this area. Even if we do get a pullback, I don't think it's going to be too much on the VX, but you never know. Microsoft is reporting after hours as well. So, and surprising enough, when you have a company like IBM, which was left for dead, uh, they had really good earnings last night. They reported last night, and so really nice pop in IBM in the overnight session here. So that's probably going to prime the wheels here. Hey, do we really want to be too short tech here in that scenario? Okay, so just keep that in the back of your mind. Uh, I'm not necessarily saying that tech long is the way to go. So because we have TLT coming down this morning, so tech and bonds typically are inversely correlated. Generally I'd say 80% of the time. So we do have the bonds coming down here. I did mention last night. I do think that we're going to be coming down to the weekly 200-day moving average into the Fed tomorrow, down at this levels. Okay, and we do have. So that's one scenario. At least the weekly down in here. So we have a weekly and a monthly support MAs. I think going into that news, they're going to be coming down into this zone, somewhere in this zone right here. Not necessarily taking out that prior low in March and April, but actually we're going to see yields popping up today in today's session. That could possibly be good for IWM, which is dramatically oversold here. And if you go on a 1 hour time frame, some things I'm looking at here, compared to some of the other industries right here, you know, uh, away from the 200-day moving average. I mean, it looks really ugly here. So, but it's if you're a buy the dipper scenario, this does have some room to come back up into your 1 hour 200-day moving average, the 206 area. So just keep that in mind. If I'm right, yields are popping today. Uh, that we could possibly, and on IWM slash CL, see how that's going this morning. So it looks like some of the froth here in the crude oil is still, but crude oil is an extremely bearish chart, or extremely bullish chart. So technically, it is still holding here. So just keep this one on watch. You know, uh, it just looks like a bullish continuation to me, possibly going over to 200 for a rally today in that initially here. So just keep that one on watch as well. Okay, so I'm just going to go through a few of these charts here. Where do I want to start with here? So we're going to go with SPY, if I can find it here. SPY, okay, you go in here. We came off of a critical support yesterday. That's a monthly support level, okay? This was a monthly low level that we bounced off of yesterday. We got a downtrend initially here. It's still early, it's 5:50 in the morning. It's still early. We are rejecting that. I don't know for how long that's going to happen. On the 1 hour here, obviously we had a 1 hour 200-day moving average. So I think we're going to be coming up, and at the very least coming up into that area and maybe back testing my trend line. So up in this area up here, the 445 possibly today on SPY to the upside, and then of course you have the downside scenario as well if all the markets decide to implode as we get closer to the open. So there's still a whole lot of risk here, and if you go out in the larger time frame, like I said, the problem I do have here, keep this in mind here. So we got a weekly, and then we have a monthly support low area. These are my two primary supports down here. So that's below us here. So as long as we are trading above the 428 area, I think this is supportive for SPY. So just keep that in mind. We do have some MA support, moving average supports, to support price right now on that. Qs, we do have Microsoft reporting coming off of a very critical, they're trying to say, hey, we're okay with holding this here. I think it's a really dangerous scenario. But my point is, we are away from our major moving averages. So this is a falling knife scenario here on tech. So be really careful. I'm not saying it can't go back up, but it looks like they're trying to save tech this morning, trying to get back into these prior monthly lows. So if we start accepting prices above 355, then you will probably I don't know. It kind of looks like tech is trying to keep a bid here, and it's trying to migrate higher, going into some of these mega tech earnings coming out starting tonight. Okay, so it really looks like they're doing their best to try to save tech here, in my opinion, and probably try to save this trend. So we'll see what happens going forward here. Okay, I got the big ones there, and then I'm going to go through, let's see here. One of the worst ones out there, that's your XLC. Okay, and this is a really ugly chart. This is your communications. And if you go over here on my holdings, Facebook, Alphabet, and Netflix. Alphabet and Netflix have been taken to the woodshed. Facebook's been trading in sympathy with them. So those are three of the biggest holdings, and that they make up basically 50% of the a little over 50% of the entire fund. And no wonder it's getting hit and taken to the woodshed like it has been. So, but basically, this is a head and shoulders pattern, okay, which hasn't broke yet, but right down here, near the lows of the shoulder. So we would definitely want to keep this one on watch. Looks like it's going to lead to the downside if the markets decide to sell down. So do want to keep that one on watch. That is that's one of my top warning signals. Okay. Now on the bullish side, okay, XLF, we're at the bottom of the channel. We're above the 200-day moving average this morning. So we are slightly above the 200-day moving average on XLF this morning and inside the channel. So that suggests that IWM might actually catch a bid today. XLI, I noticed this morning, it was actually holding a monthly support level this morning. And if you go in here and zoom in, you're still below the 200-day moving average. So, it's a little bit more bearish here on your industrials. So keep that one on watch. This whole inflation theme, could weigh on this one. I personally, I want to see areas like financials that are above the 200-day moving average. Those are the areas I want to be looking to be buying the dip. The ones below the 200-day moving average, I'm not necessarily wanting to buy those dips. And tech, for the most part, and industrials now are still in that scenario. Okay, XLP, that's your consumer staples. It's trending to the upside here. Almost cleared all your shortest term daily moving averages, suggesting even higher prices on that. That is one of the strongest sectors out there. Healthcare, it looks like healthcare is beginning to break down here. So, this heads up on that. Kind of trading sideways. Really don't have that much of a head. Typically the head is bigger, so I'm not going to say that's a head and shoulders pattern. You know, uh, because of the situation. It actually looks more like an ugly head and shoulders pattern, where this is your uh, left shoulder, and all this up here is the top, and then we'll come down into the right shoulder. Okay, that's the way I would look at how drawing that. That looks like an ugly head and shoulders pattern to me on the XLV. Now, XLE. Okay, XLE. Really nice pattern here. Came down to support. This is your second best sector. It's your energy sector. We get above the monthly 200 here. I think that's the monthly. I have to double check. That doesn't sound right. I'll have to double check my charts here. Well, there is a resistance here, and that doesn't sound right. Monthly shouldn't be up there. I guess it is there. That's your monthly 200-day moving average that we are fighting right now. If we start breaking above that, boom, that's off to the races. So we could very easily have a move up into the 75, 60 area, 77, 60 on your XLE. Really looking constructive here on your XLE, in my opinion. Okay, and then, like I said, Microsoft's reporting tonight. I don't want to get too much into these individual names. Transports right here. Let me go back on the 1 hour here. Okay, transports well below. We've been trending lower here for a while here on our transports. We're well below the 200-day moving average on that, and we're still below our major MAs. So our transports are giving us a bearish signal. So definitely keep that in the back of your mind. Transports doing that. Very weak still on our transports. SMH, bearish signal on the 1 hour. Similar situation. We still got a lot of MA support here. So yesterday we did break down below the 265. If we were to come down and start pushing below the 265 on SMH, then the markets are in deep trouble. So heads up on that. Okay. I gave you a quick rundown here. There was more stuff I was wanting to tell you this morning, but I cannot remember now. So that just gives you a really quick rundown. Initially, I'm looking to buy the dip. Okay. And I'm going to trade what happens. I'm looking at the Russell and possibly buy the dip scenario. So that's what I'm looking at. I don't really like the main core earnings have not come out, so I really don't like loading the boat to the short side in this scenario. So, okay, guys, please, like I said, follow me on Twitter, Gumby9662C, and retweet it if you can. Okay, and thanks a lot for tuning into my video.